Welcome everyone to Stock Market Open Live. Today we've got GME going to the races, the moon, or whatever you want to call it, as Roaring Kitty suggests he's back by slightly leaning forward in his chair in an X post. We'll look at that in just a moment, and then we also have CPI this week, which that's going to make or break this stock market. So I'm going into it hedged. If we go up, great. We go up with weak CPI reports. Fantastic, no problem. That might be the catalyst that finally says the concerns of inflation are truly something that we could fade and be optimistic about. We'll see though. CPI report is in 2 days from now, so that's a pretty big deal. Obviously, we've got a little bit of a run here on BTC. Look at that AM BTC run again. Really interesting. It's always that. It's always that like 3 to 4-ish AM pump that just comes out of nowhere. But something that I noticed over the last couple days is look at that 61.7 line again. That 61.7 line came into play twice. In fact, you could almost say it came into play 3 times, given the little pit stop we made right here at 61.7 on the way up during that 5 a.m. pump. So once again, that 61.7 line, really important for BTC. A lot of folks think BTC really needs a large new catalyst to really draw the inflows that would suggest that prices might keep going up. One of the downsides of, unfortunately, sort of the ETF approval now is the next catalyst is sort of removed. At least a lot of folks worry about that. Now, then of course you've got the idea that you've got the next halving that occurred, so maybe we shouldn't be so worried about that. But then we also look at the risk asset nature of BTC and say, well, there's also the balancing effect that we'll find in stocks as well, which is if we end up getting a hot CPI report this week, well, I think no risk asset will be safe, unfortunately. So expectations this week for CPI are somewhat all over the place, and I think that's mostly because people don't really know where to go anymore with this data. It always seems to you think it's finally gone, it starts coming in hot. You think it's always going to come in hot, all of a sudden it starts coming in low. But this is the first CPI report of the second quarter. So the first CPI report of the second quarter will be pretty critical. Looking for a read on CPI Wednesday morning of 0.4 month over month and 0.3 core month over month, with 3.4 and 3.6 on the year over year figures for non-core and core. CPI, let's see here. What is this? U.S. equities and treasuries are bracing for CPI data. Yes. Let's see here. U.S. treasuries may be vulnerable to a setback. The risk is if inflation comes in hotter than expected and the economy slows after retail sales this week, stagflation concerns would potentially outweigh any rally enthusiasm. Yeah, that's the other thing. So you get CPI on Wednesday, but beyond CPI on Wednesday, you get PPI on Tuesday, which is weird. Usually we get CPI first, but okay, fine. So tomorrow morning, Tuesday morning, we'll get PPI. Wednesday morning, we'll get CPI. And then on Wednesday morning, we'll also get retail sales. So it's kind of like a crazy little week here. So personally hedged, and I think there are one or two things that happen over the next 2 days. I think you either sell off going into CPI because there's true fear about it. PPI will probably be the driver of that, because you could get a hot PPI read tomorrow and the market will fall going into CPI. Or you just end up rallying right through, and then obviously the actual earnings will be there. The actual report will be the catalyst. So we'll see. Yeah, that's gonna be really interesting. So again, I'm gonna go into it hedged, and it's less of a trade and more of a like, hey, if we get a bad inflation read, it's going to be nice to have some downside protection, especially since downside protection right now is relatively cheap given the drop in the VIX. But not only the drop in the VIX, you also have sort of put-call ratios in a place where it seems like a lot of people aren't actually picking up downside protection. So I like playing the contrarian a little bit. And if everybody's bullish, I'm going to start picking up a little bit of some hedges. So my POV. Okay, so let's take a peek at how some things are moving. Here's GameStop. Ooh, AMC also as well. So GameStop, you could see on the day chart, last week it started running. It was somewhere around $11 yesterday, and it just started running. Let's go to the unaveraged candles for a moment here. You started going 16%, 29%, down 1%, flat, down 2%, up 13%, down 3%. Now all of a sudden, 37%. So it's up at $24. That's about a double from where it was last week. So we'll see how the enthusiasm spreads this morning as there's some excitement about the next sort of January 2021, which is wild because that was sort of around the time the market really started topping. Obviously, we ended up having a euphoric rally at the end of 2021, but 2021 wasn't straight up. 2020 mostly was. 2021 was a little bit more bumpy. Some fears over J-Pow, so we'll see. Okay, here are the Qs up 30 bips. Pretty good for this morning going into CPI, so we'll see what happens. You've got Trade Desk up 62, ARM up 3.2 in the morning here. What about Intel with that next plant they're talking about? 90 basis points here. And then you have Robin the Hood up a couple percent. Yeah, probably because you're going to start seeing, if there's this sort of GME movement again, maybe you'll actually start seeing a lot more trading validation again. Very interesting. Then you've got Intuit. Wow, why is Intuit down 6%? Hold on a sec. I gotta take a peek at that. Intuit. All right, let's see here. I don't see anything on it. Oh, that's interesting. Intuit price target rate. Yeah, I don't see anything on Intuit in terms of why they would be down 6% in the pre-market. That's interesting to me. We'll see if that ends up holding because I've been looking for an opportunity to buy into it. And I've been very patient with this one. So we'll keep an eye on that. Let's see here. Okay. All right. Dave & Buster's bled down to about $53 from 65. You've got Disney back to 105, almost knocking on the door of 100 again. AMD's still sitting in that 150 range. Goodness gracious. See, like that's one that I think is cheap. Let's say we get CPI that comes in low this week. I got cash ready to buy again. I'm just gonna be very data driven. And we'll play it sort of just like the Fed. That's my POV. I'm still a little, quite a lot more nervous than in recent, than in the last beginning of 2023. We in volatile Nike swoosh recovery. We've basically mostly had that, and been bullish basically for about 14-15 months straight. But started getting a little bear mode just here since March. I'll just give an example here of just some of the stresses that we're seeing, and these are stresses that they're expanding, and you're sort of starting to see this start becoming more of an issue in various earnings calls. Even McDonald's. I mean, when you actually look at their earnings call, they're concerned about people coming to their store less. And that's why they're trying to come out with a $5 value plan, which I think is still a joke. You're going from like dollar menu to $5, value plan. So it still feels like a slap in the face. But look at this. Multiple job holders, primary and secondary jobs, both full-time. And this is the trend since, quite frankly, the end of 2021 here. It's straight up in the number of multiple job holders, both full-time. Kind of wild. Okay. So, I mean, that just adds to some of the other concerns that I've had, but that's okay. And that doesn't mean I'm going to be right, but I just don't want to be blind to, you know, this, what's it called? I'm going to be blind to your blind spots. Can you say that? I'm going to be aware of your blind spots. Maybe that's a better way to put it. All right. Let's see what Doomburger has for us this morning.
3 months, we've seen the annualized change in supercore go up by 8%. We've seen the annualized change in core inflation go up by 4%. So the momentum in inflation in the last 3-4 months has just been moving in the wrong direction. So what's really important about Wednesday's number is whether that momentum continues or whether we're going to see indeed, as Mike and Danny was just talking about, move lower in inflation.
Why do you think from the Fed's reaction function they care more about that CPI print, which a lot of people, including Austin Goolsbee, have said is a lagging indicator, versus a real weakening in the consumer in a sense that growth is being challenged?
Well, I think the problem for them is that the momentum in inflation has just not been going down for the last several months. And if momentum has been building to the upside, we really need, from a Fed perspective, to see that momentum break. And that's the risk with the numbers this week. Shelter, there's an argument about, well, on the one hand, maybe areas of occupancy rates are looking a bit better, which would argue for shelter inflation to come down. On the other hand, Case-Shiller is now rising at 6-7% at an annual rate. So that means that we're seeing momentum actually building in home prices. So there's different parts of the scale here that are weighing, and we just don't quite know what the shelter inflation data will do. And it has been coming down a lot slower than what anyone expected. And that might still, combined with auto insurance and combined with everything that's going on in the subcomponents, still continue to put some upward pressure on inflation.
So you still see...
Yeah, and I mean, that's a big thing is, I mean, the Wall Street Journal even has a headline on shelter inflation coming down slower than expected. Let's see here. So, oh, they've got a few things on the head here. So, let's see here. Well, one of the reasons they had, at least yesterday on their front cover, was had to do with rents. And so they suggested that inflation was coming down so slowly because of rents, possibly because it takes so long for rents to roll over. But let's see here. This is an interesting one. Why is inflation so stubborn? Ask your local business. Health insurance, wages, aluminum, cardboard, death by 1,000 paper cuts. And it's remarkable just how sort of long it's taken for the price increases to really get through the system. That's a way of saying a lot of prices have lagged a lot further than you would expect, like insurance, health insurance, motor vehicle insurance. These are things that have really driven up some of our core prices. In fact, if you look at, and I thought this was really interesting, this weekend I was looking at this, GDP by the in the United States, and you got to get a breakdown of it. So let's see here. So you go to the Bureau of Economic Analysis, current release, go to the tables. I'll pull these up here, and I thought this was so interesting. You go where the GDP increase is coming from, and then you're gonna jump on over to here, 2024 Q1. Okay, because obviously we had a read of just 1.6%, but that was primarily because of exports and inventory buildup. So I thought to myself, okay, well, where did the actual increase come from? Those are income. And what I found, this is income again. Hold on, let me get to the right table. What I found, okay, yeah, here we go. Okay, so these are exports. This is where they come in negative. Imports. Oh, I need to find the darn thing. I should have had it already, but I don't. Basically, what I found is it ended up being healthcare. Well, I could probably just search for that. It was, here we go, here, under services. In the services category, the biggest ones were healthcare, up a 0.59 as a contributor to GDP. And right over, where was the other? Here, this was another hot one. Financial services and insurance at 0.37. Both of these contributing together almost 1% of the 1.6% GDP increase. In fact, household consumption expenditures for services were up 1.45%. And the only reason we got a 1.6 for GDP is because you had other items that were negative. Like here, net exports, negative 0.86, imports, negative 0.96. So this is obviously like a nasty kind of table to look at. It's just like so many numbers and kind of exhausting. But I was looking at this and I'm like, all right, so goods were negative, durable goods were negative, motor vehicles and parts were negative, furnishings for households were basically negative, recreational goods basically negative, other durables were 0.13, it's like nothing. Non-durables were flat. That's like food and gasoline and clothing, big deal. So that was basically flat. And private inventories were negative, exports, imports were negative. So you basically had services led by insurance, and then you had some investment, which I think is driven heavily by, frankly, the AI revolution. And you can see that here, software investment spending up 25 basis points. IT processing equipment, so your AI revolution up 0.19. So it's all showing up, right? And think about that. So health insurance, car insurances, homeowners insurance, that stuff's getting more expensive. AI spending is showing up in software spending and chip spending on infrastructure. And then where else is there spending? Well, take a look. I mean, I have trouble believing that national defense spending was negative 2 basis points, but whatever. Non-defense spending at 0.01, so 1 bit. State and local was up 0.22, so consumption expenditures up 19 bips from basically fiscal spend. And so basically what made up GDP's strength was insurance, healthcare, government spending, and AI. That's why GDP is so strong right now. And I think that's a really interesting breakdown. Like when you look at it, you go, how is GDP strong? How does JPOW see GDP at 3.1% when you exclude the impact of those imports, exports, and inventory buildups? And it's like, well, there it is. It's government spending, it's AI, and it's those core inflationary services that have been hitting. Let's keep going over here.
From some of them, Moody's still has AAA, Fitch has been downgrading in August, so that's really important. And the third thing is the term premium, which you can find on your Bloomberg screen here, has also been trending high in the last 6-9 months. So the stresses are slowly beginning to emerge. So far, most auctions are going fine, but investors should absolutely be keeping an eye on this. This is something that's just a bigger and bigger risk in the background.
You have some incredible statistics in terms of the amount of debt that's going to mature by the government, $8.9 trillion over the next year. You talk about an average 12% of government spending is currently comprised of debt servicing payments. And we're talking about a lot of people who are still dismissing this in terms of a major risk. What do you think could be the catalyst? At what point do you say to people, you can dismiss it until you can't? Is the election something you're watching?
Well, I would say that if you think about this from a corporate perspective, when debt levels go up, for a long time, it doesn't matter in most cases, and certainly it does matter. So the fear you can have, exactly as you're highlighting, that the rollover of existing debt is roughly around $9 trillion. Then on top of that, the budget deficit in very round numbers is about $1 trillion for the next many years. So that brings us to $10 trillion. And then, by the way, the Fed is still doing QT, which adds a few more $100 billion. So it brings you to more than $10 trillion that need to be refinanced in the next 12 months. So that's roughly a third of GDP. If we do continue to see more spending, and if we continue to see budget deficits as far as the CBO continues to forecast, then I do think that investors need to watch very carefully what's going on again with auctions, what's going on with rating agencies. Are they downgrading the U.S.? And finally, what's going on with the term premium? Because that's where the stresses in financial markets will first begin to show up.
So put you down as or the deficit, one of those in that camp.
Absolutely.
Dorsten Slock of Apollo, thank you so much for joining us. Very much enjoyable to hear your point.
Sounds like a good old traditional German accent there. Interesting on ratings, I suppose, from watching. I mean, he's got a pretty fair take there on the heads up of what to worry about with inflation. You have bond yields down right now, 3.1%, going into the open for the week of inflation data. All right, let's see if seeing the sizzle has any sizzle for us this morning, and we'll go look at what some of the suits are saying as well. We got them ready for us. Okay, yeah, they're on commercial here. No problem. Seeing the sizzle. Fine then. Fine. So let's see here. Oh, Danish, y'all think? Okay, never mind. Okay, so let's go with. Where is? Okay, we're gonna go for the Roaring Kitty. Yeah, so pretty much the last time he posted was June 18th, 2021, and he basically showed just a picture of him going to sleep, and by him, I mean cats. So you have these cats basically going to sleep. And now the latest post is simply this. This is actually kind of hilarious. So this one little slight seat adjustment has led to speculation that the next phase of the GME pump is alive. Some folks are saying no, this is the opportunity to short. I don't know, man. Short is like that's exactly what contributed to the the craze last time. This can't be real. Must short. It just squeezed so hard.
Short Hills Mall, which is a New Jersey area, at that Apple store voted against unionizing. Joining us now on all these headlines, Tony Sacconaghi, Bernstein senior research analyst. You positive on the stock right now, Tony?
Good morning, Joe. Yes, we are positive on the stock. We upgraded our rating a couple of weeks ago. And we think risk reward on the name is attractive at current levels.
Are there labor issues? Are these de minimis to what we're talking about? And the other stuff we're going to now touch on is much more important, or is this something to watch?
I think labor is relatively de minimis. If this is something happening at the retail level, retail stores for Apple account for less than 10% of its sales on a global basis, and certainly less than that in the U.S. So clearly there could be some incremental costs associated if there was organized union activity over time, but it's not material in the grand scheme of things for Apple.
Tell me about Apple and AI. It almost reminds me of musical chairs. Who are the frenemies? How's that all going to play out? What do you think the strategy eventually will be, or can anyone know at this point?
Well, I think the important thing to recognize about Apple is it doesn't have to do this itself. There's been sort of this criticism by investors that Apple is not spending enough on AI or it's behind in AI. And I think it's really important to know that there may be some elements of AI that Apple will undertake itself, and there will be some elements of AI that Apple will look to partner with. And I think we can see that today with Apple in the sense that it derives a significant portion of its profits, probably 25% or more of its profits, from providing access to search for Google, and Google being the default search engine, and from its app store. In both cases, other companies, Google is doing the search and creating the search engine. In the app store, it's the millions of app developers who are putting their blood, sweat, and tears in. And Apple collects effectively a toll for access to its customer base. It's incredibly lucrative. And the same thing could happen in AI.
Tony, so that's the question. Do you imagine that when we hear about a deal, if there is one struck between OpenAI and Apple, that OpenAI is paying Apple as opposed to Apple paying them?
Yeah, Andrew, it's a great question. I think it could be dynamic over time because AI models today are just starting to figure out how to monetize, much like search initially was looking for ways to monetize itself. And over time, certainly, if Apple is providing access to 1.2 billion iPhone users as a default or as a partner with someone, and they are making significant money, they will be paying Apple some kind of revenue share. Initially, that may not be the case.
Do you imagine that OpenAI, which currently runs on Azure, that effectively this deal, if there is a deal to be done, that OpenAI's technology will run literally physically on device? I don't think it really can really run on device. If it doesn't run on device, is it going to run on an Apple server somewhere? Is it going to run on a Microsoft server somewhere, in which case Microsoft is going to be collecting revenue somehow?
So we don't know the specifics. I think we do know in all likelihood, if there's a partnership, a lot of that search will be running off device. And so we'll have to go through data centers, whether that's through a Microsoft data center. It's certainly plausible that could be.
Yeah, because that's the speculation right now, is that the AI that you get that Apple, integrates, it would be on device, something that could really be run on an iPhone. I mean, it's possible you could get almost like maybe like a downloaded version of GPT or something to actually just run on device. I mean, that's what Apple's been pushing for. And these partnerships are really interesting with potentially, these rumors around an OpenAI announcement. You've got some OpenAI announcements expected today as well, so we'll see what happens.
Intensifying its efforts to make Siri more intelligent. So Siri could say, hey, this kind of query is going to go to OpenAI. This kind of query will go to a voice to image or voice to video generative AI LLM going forward. And so certainly there could be a front end in place that decides where a user query should go to, which AI engine or LLM going forward. So it's certainly plausible that Apple could have deals with more than one partner.
But the weak hands, you think it's back in a good position? I'm not calling Warren Buffett weak, but there has been a change in, I guess, the type of shareholder, long-term, near-term. You think that anything that needed to be done to wring out some of the complacency is done, and it's onward and upward here with Apple?
Look, Apple stock has underperformed year to date, and I think part of it has been there's been a weak cycle. So part of this is part of the attractiveness of Apple is that it's trading below its 3 and 5 year averages, and so that provides a more attractive entry point. Our belief is Apple is a really powerful consumer franchise, and now you have a more attractive price to buy it at. I think AI could certainly be a catalyst for the name over the next 3 or 4 months in the introduction of the iPhone 16. But a lot of this is we have a really good company. It's underperformed year to date, and so investors have an opportunity to buy it at a lower price.
Yeah, you might. I don't know. If you see 165 again, that might be a good place, or maybe even here. Who knows? Anyway, Tony, thank you.
Interesting POV. The OpenAI live stream, by the way, that's at 7 a.m. They'll be covering, quote, or demoing, quote, some updates to ChatGPT and GPT-4 that comes basically after this live stream. Then we'll obviously be watching to see what those updates are, how those might affect Apple. I personally like Apple stock. I don't think I like it as much as I feel like everybody's going to be loving GameStop today. There's certainly going to be some entertainment there, so we'll watch this. And very bullish here on the BTC movement. If I go out on the day chart, I finally got some enthusiasm here. So we'll see if we can hold up. No bad omen today. Being above that 61.7 line is a pretty big deal. As you can see, we've rejected that a few times now, and almost rejected it as on our way up. So watch here. In the meantime, the Qs are up actually about another 9 basis points since we last looked. So definitely some enthusiasm going into the day here. That means we're going into PPI, CPI with enthusiasm. And it'll be the driver, really, of what stagflation fears are or not. I guess what would be frustrating is if you get something that's like really kind of close to what the economist estimates are, which are kind of warm, and then it's sort of like, okay, it's good, we hit expectations, but then it's also still kind of warm. I should look at the range on the core. So the core survey is 0.3. The average and median are 0.3. Oh, they are so concentrated. Oh my gosh. So there are 59 estimates, and all of the estimates basically are between 0.25 and 0.35. So they're so tight. I think there is maybe one, there are two estimates below that and three estimates below that, two estimates above that. But whatever, that means 54 of them are all sitting between 0.25, 0.35, which makes the one standard deviation point, the one standard deviation point is like 0.27 and 0.33. So it's very, very tight on these expectations, which that makes me nervous. When it's so tight, you could pop to either side. We've seen it happen many times before where you just get a nasty miss on data like that. And I personally, I hate consensus like that. When I see consensus like that, I'm like, okay, everybody could get really rocked this week because everybody's too much of the same mindset. So we'll see. Okay, Brent, $83, down like $8. Pretty good. Not in the last day, but like in the last month. So, all right. I need my coffee. I had my coffee, but it tasted like crap, so I poured it out. Now I gotta get a new coffee. I think I accidentally didn't put in a new like pod or whatever. I gotta see what's going on. But anyway, let's listen in here.
Everyday investors, these are one-day bets on the direction of the market, which of course can offer outsized returns, but also outsized risk. Last week, retail activity in zero DTE options, as they're also known, saw the biggest weekly sales since the beginning of the year. That's according to JP Morgan. They're making up a larger slice of overall options trades. And according to Spot Gamma, zero DTE, those are now around 50% of total S&P options. Single stock short-dated options are about a third of all total volume. Meanwhile, there has been a lot less buying of some of the safer proxies for cash out there. Vanda Research points out slowing inflows into money market funds, which had seen a surge of inflows as rates started to rise. And Vanda says all of this new risk appetite is a function of chasing some of the rising risk asset prices and then tax season ending. They say tax-related peak retail bearishness is in the rearview mirror, and note that retail has been, quote, rotating more aggressively into single stocks. JP Morgan also points out that retail was the most bearish on some of the Mag 7 names last week. And then within that group, they were selling NVIDIA and buying Apple. They were also overwhelmingly selling semis and then media and entertainment stocks. So think of Netflix, Paramount, for example, partially offset, though, by some dip buying in Tesla plus energy and food stocks, guys.
So riskier types of bets, some people might actually call it gambling. And then while we're on it, we've been watching this morning shares of GameStop, which I think are up more than 40% this morning. They were up 20% when we started talking about this, 27%, now 40%, simply because Keith Gill, who's better known as Roaring Kitty, the trader who was so involved with driving those meme stocks up earlier, posted on Twitter for the first time in 3 years, and it was something that some people are saying, oh, he's sitting up and paying attention more closely. They thought maybe to GameStop shares. What's going on?
It is sort of like the Ryan Cohen dynamic where he tweeted out, a picture, this sort of vague picture of an ice cream cone. People went and tried to trade on it. So you do see, we haven't heard from, as you said, in 3 years. So it is sort of this momentum. One of the dynamics in GameStop after that whole episode in 2021 is there's almost no short interest. People do not want to get caught shorting GameStop. You saw what happened to Melvin Capital. So you have sort of this long-only dynamic, very thinly traded. And if you look at it, it's around $17, but the height was $120 per share. So 40% rally is massive on a daily basis, but nowhere near the height of 2021, guys.
Yeah, it just makes me feel like there are definitely people who are still looking at this as kind of Las Vegas with some of the trades, Kate.
Yeah.
Anyway, Kate, thank you very much. It's good to see you this morning. Folks, that does it for us today. We will be...
Yeah, the percent of float that I see is 24% of float short. Let's write that down. So GameStop, 24%. Let me see as of what date that is. 24% short as of, that looks like 4:30. So that's a couple weeks old now. And then you're looking at a, yeah, they always did a good thing here, the S3 squeeze ratio. So the odds of there being a squeeze, the closer to 100, the more likely. 100 closer to squeeze is at 60 as of 04/30/2024. So not wrong about that, but yeah, you definitely have way smaller volumes than what you used to have during the madness of 2021. Let's take a peek here. So let's go to the day chart. Yeah, volumes have been like really between 1.5 and 4 million in terms of volume. And then the days it runs, it all of a sudden it goes to like 50 to 100 million shares of volume when you have those runs as of like 2022. And the biggest day here was about a $66 million share rally in 2023. Biggest amount of volume we've had this end of last year was about 61 million on earnings. Last earnings, you really only had about 18 million. And all of a sudden now you're trading 36, 24. So somewhere between 24 to 40 million shares right now. So you definitely have some room to keep going here with volume. And zooming out, I don't even have the fibs at the bottom. I haven't adjusted this in a long time. Might be worth doing that. But yeah, let's just go do it really quick. But where's our floor here? 995. That just sounds like an ad. It just sounds like some form of what's it called? Get your discount now. 995. There we go. Okay. So we'll see. Is that going to pull it all the way up to 22? Oh, no, we're going to break right past that. We're already at 24 right now. Yeah, sitting right here about 24.30. So you'll be right past that. Fibby. So we shall see what happens today. Entertainment guaranteed.
A bit of a nice game over the weekend, looking at CPI coming our way midweek. Stiefel, next 500 points are down.
You know, I have that note in front of me, and mid-quarter correction, too many. They talk about sustained PCE inflation, the Fed seeks, they call it a pipe dream. A pipe dream. And meantime, I go over, David, sections of the economy after sections of the economy, and everything's down a little bit. Mm-hmm. And that does not.
This is an interesting line. Look at that. I'm going to read that off here. So you've got the next 500 points for the S&P 500 are down. The Fed already harvested all of the normal post-recession disinflation we would expect. As a result, the sustained 2% core PCE inflation the Fed seeks is a pipe dream. We expect Fed cuts to be pushed back further, causing a middle quarters correction for equities. Ooh. Bears.
In any number of earnings that we saw, although again, not all across the board, Jim.
Right.
And so I don't know what we get this week that sort of can help confirm or deny.
I was doing a piece for the investment club, and one of the things I saw that was daunting. I was looking at AutoNation and CarMax, then of course reading about the home builders. There's not enough used cars out there, and there are not enough used homes out there. It's kind of interesting, isn't it, that we all lack used. And this again is just so COVID that we lack used. I mean, there's always had a lot of used cars around. There always was a used home component, and they're just gone.
A used home being an existing home.
Well,
same thing. I know you're using the word.
Just trying to be
just making sure people know.
Trying to be a little more cinematic.
I like that. No, I like that. Yeah, nobody's selling their used homes right now. They're just living in them. Exactly. They're using them.
Someone approached me on my second time on my 2006.
Well, this is interesting. So SoftBank is suggesting they're looking to launch their own AI products next year. So remember, SoftBank has that 90-ish% stake in ARM. So 90-ish% stake in ARM. And just announced, oops, that's weird. Why is it doing that? Oopsie daisy. Oh, there we go. Okay, 90-ish% stake in ARM, and looking to launch its own AI products next year. So more competition for really the chip designers like an AMD or an NVIDIA. So potentially to use TSMC to manufacture. Yep. So I wonder how the AI trade's moving after that. So if I go ARM, you're up 3% on ARM, you're at 112. If I go NVIDIA, you're up 32 bips. AMD sitting at down 2.8. Intel 0.74. And then Supermicro should be up on that. 55 basis points nominal. So not seeing a lot of movement here. Tesla up about 61 bips here. Did some more FSD 12.36 driving. It's pretty good. It's definitely cleaning up some of the little oopsies of the prior 12 versions. So getting interesting. Okay, let's see here. This round of inflation data will matter greatly. The mood has switched towards optimism. Yes, it has. Let's see here. University of Michigan was somewhat negative last week. We saw that. Fall in expectations, rise in inflation expectations. What about the 5-year and the 5-year forward? When we look at those. 5-year break even. Where do we sit? So the 5-year break even. Let's write these down. There we go. Break evens. So 5-year break even is at 234 right now, which is still pretty benign. 5-year break even, 2.34%. What about the 5-year forward? We haven't looked at that one in a moment. 5-year forward. So the 5-year break even, mind you, is what we think inflation is going to be averaged out over the next 5 years. And then the 5-year forward is what we think it's going to be the 5 years thereafter. So year 5 to 10. 5-year forward break even. And that sits at 2.31%. So also somewhat benign. Neither of those seem to be too scared anymore. Although there was a period of time they were a little freaked out earlier this year. And then J-Pow actually addressed them too. So yeah, lower inflation is almost universally expected, right? That's the concerning part. Is if everybody expects inflation to come in weak and then it comes in hot, you got some problems. So das will be very interesting. Okay, let's see what else is out there. So catalysts again, Tuesday PPI, Wednesday CPI and retail sales. So we're getting both. That's good, and both at the same minute too, 5:30 a.m. Those will be wild. So of course we'll be covering those live. Make sure you're here for those. And see, do we have many earnings as a catalyst this week? Because I know Nvidia is coming up in about 11 days or something like that. Let's see. This week we have. Okay, so today is Monday. Tomorrow you'll have Alibaba, Home Depot, C, Intuitive Machines, Jack in the Box. Then we get into Rumble. Rumble will be Tuesday afternoon. That might be a catalyst for DJT. Wednesday, Monday.com, Hut 8, Cisco backed. Yeah, that's all Wednesday. Thursday. Ooh, Walmart, Baidu, JD, John Deere, Under Armour. So we'll get a little bit more on the consumer. Applied Materials. Not that many earnings this week. Walmart will be fascinating, so will Alibaba. Really see what's going on with that consumer. Like, has everybody gone to the Chinese sellers? Is that why Etsy's in pain, or is there a broader consumer problem? Next week, you'll get Lowe's, AutoZone, Macy's, Zim, Toll Brothers, Target, Nvidia, Snowflake, Elf, Intuit, Ross, Workday. Yeah, that's all sort of the next 2 weeks. That is going to be very entertaining. Entertainment guaranteed. Chinese regulators tell local tech firms to buy fewer Nvidia chips. Uh-huh. Yes, don't buy the best chips. Don't do it. Shall not be used. I'm sure they just buy them off the black market, honestly. It seems silly. Okay. Yeah, volatility index dropped again. I'm gonna pull up a chart here, the VIX. Let's pull the VIX up. So here's your volatility index. Let's go out on the day chart. So I was looking at this, a couple things to note. First, you've got this longer term downtrend. Those are the channels, channel lines that we're seeing. And then if you go into the near term, this is not so great. This shouldn't even be blue. This is just not a very robust line. Really what you're trying to do is a line right about here. That looks better, but we've really broken that a few times. You know, a couple times over here and then once over here. So the idea might be, though, that if we get a near-term bounce in the VIX, it comes up quickly back to about that 1450 level. Not a big movement. I mean, we just had the VIX run all the way up to nearly 20 bucks in the span of a few days at the end of, sort of middle of April, which, you know, mind you, the last time I went bearish was March, and the volatility index had fallen substantially low in this era over here. And sure enough, we got a sell-off, we got a run in the VIX. I wonder if we're going to set up for something like that again. Certainly we will if inflation comes in hot. And we'll be watching for that on Wednesday morning. Okie dokie then. All right, what do we got here?
Are going to come down. So there's been that thought that hedging costs will come down. They can lock in yields now and then hedge the cost, have the hedging costs go down later, which would be very good for them. So we've been seeing significant inflows on that notion. You know, if the CPI is not where we need it to be, if you see inflation continue to stay too strong here in the U.S., you know, that will not be good for inflation or for hedging costs down the road, which would then be a negative from overall flows into the investment grade market.
Derry, you look at, I mean, you're focused on FX, but you look at research across asset classes as we head for another positive open here in the U.S. How does the U.S. equity market look to you?
Look, the backdrop is still constructive. You know, earnings are still doing well. The economy is still doing well. So it's hard to be too bearish on it. I know our team have generally looked for around 5% upside thereabouts on the S&P 500. What I think has been curious, just speaking again, putting on my currency hat, is the relationship between the dollar and equity markets, risk appetite, if you like, historically was very straightforward, inverse. This year, it's been a much more fickle relationship. And so, you know, I'd love to be able to take my cue from equities in terms of driving a currency view, but maybe a bit like your home setup. Yeah, I'm driven to tears trying to work out that relationship at the moment.
Thanks very much for joining us, Dara Mayer and Matt Brill, on this Monday morning. Joining us now with a look at stocks is the aforementioned
5% upside. Yeah, you know, one of the things to think of is, you know, as I always say, the trend can be your friend. So entirely possible that you just sort of keep getting a movement on the market upwards. That's not unusual. So, but again, we'll have to get either benign or pretty dang close to expectation data this week. And hopefully that's the case, because you don't want to drive the economy into a recession. You really don't. You don't want the bearish play to play out. It's just bad for jobs. It's bad for a lot of things. U.S. CPI on Wednesday will be the main market mover, says, who is this? This is, I think this is Crédit Agricole? Oh, yeah, it is. All right. So, This week's focus will be on the CPI number Wednesday, which should further cement the higher for longer environment. No, don't want that. Bar to discuss rate hikes has been set high. We'll need a significant upside to actually... Well, that's true, too. That's something to consider is, you know, if Wednesday hot data, a hike may come back into play, right? This is basically what Jerome Powell suggested would be very, very difficult, a very difficult bar to cross. But obviously, if you get a pretty nasty CPI report, the market will start thinking about it. Let's see here. Okay, let's see what else here. The retail funding source continues to dry out. That's fine. This is talking a little bit about some other countries. Yeah, nothing too exciting here. Okay, fine then. Back to here.
We could hear from Bailey Lipshaw.
That's right.
Today,
I think we will.
Covers those. Jess, thanks very much. Jessica Menton there talking to us about stocks ahead of the open. Coming up, President Biden is set to unveil new tariffs on Chinese EVs.
The bottom line is I want fair competition with China, not conflict. And we're in a stronger position to win the economic competition of the 21st century against China or anyone else.
The White House preparing to quadruple tariffs on some of China's goods. The details next. This is Bloomberg.
Yeah, I remember even during Trump, you had the trade war. It was just always the trade war, the trade war, the trade war. It was quite exhausting. You know, you'd think that somebody would figure out a solution for how to actually deal with China. But more and more tariffs, I don't know, seem economically broken. So, Deutsche Bank here. Let's start off by talking about being the only person who couldn't find the Northern Lights. But anyway, so good job if you got to see those. But the main thing that'll light up the skies this week for markets will be U.S. inflation, PPI Tuesday, CPI Wednesday. We'll see if higher than expected inflation in Q1 extends into Q2 or not. Oh, that's interesting. We'll also hear from Powell tomorrow. Where are we going to hear from Powell tomorrow? I was not aware of that. Which is interesting because I wonder if he could plant some seeds as to what those numbers are going to look like. Let's see where he's going to be yapping. Fed. Okay, let's see here. Seoul. Tomorrow is the 14th. Oh, yeah, there it is. Moderated discussion with Chair Powell. Okay. So 7 a.m. tomorrow, there'll be a live stream of Powie Wowie. It's interesting. Today you get the OpenAI stream, Jerome Powell. So, live at 7 a.m. PT tomorrow. Will he plant seeds for retail sales and CPI? Aha! That'll be fascinating to watch. Well, they say, well, he said it himself. Sometimes he gets the drop on those reports, and then he can massage markets.
But, you know, if they have a union, maybe that's because they're overworked. I know the Maryland thing. I mean, it's entirely possible. We've seen whole chains where people feel that they're overworked.
Yes, we have.
Yes, we have.
I'm just trying to go through some of the union efforts. Obviously, Starbucks. Amazon's unionization efforts have largely failed, correct?
Yeah, I think so.
Yeah.
But, you know, look, unions, it's a tough issue. Obviously, I mean, when I was a member of my union, I helped call Wildcat Strike, and it ended, everyone got fired. You know, we made our point.
And you didn't have jobs.
Well, but we made our point.
There you go. Well done.
Boring. All right. So GME is now up 47%, sitting at about $25. I think the next level here is really like $30. So I mean, some really intense volatility spike, I'm suggesting. We'll see that once the day actually opens up, but yeah, vol's gonna skyrocket on this, which will be really entertaining. And let's see. Ooh, Michael Cohen to testify in the hush money trial. Okay, this will be interesting. So we'll see how that goes. Then what else? No, a little chill this morning. Intel and Apollo near $11 billion Ireland plant deal. Video rivals gold as shield against inflation. That's an interesting way to put it. I don't know about that. Nvidia and Apple rival gold as a hedge against inflation. No, Apple, I know people haven't been so excited by this year. I personally still think that's an opportunity, but let's see here. What's Apple done this year? So Apple year to date, is down 1.4%. If you were all in on Apple this year, you'd be negative year to date. That's interesting. So what's the S&P 500 year to date? 10% on the S&P 500 year to date. The Qs are up 9.8%. And then let's try like IDM, IWM, small caps. Small caps up 2.4%. It's really been driven by the big boys again. What about MSFT? MSFT year to date, 11%. Nvidia year to date, 86% year to date. Wow. Oh, I didn't know most of the rally was this year. Yeah, it was. We were at 490 on January 5th. That's crazy. I did not realize most of the Nvidia rally was actually this year. Oh, that's very interesting. I thought that was last year. I thought that was so 2023. AMD's only up 10% year to date. I know Super Microcomputer's been the mover this year. Super Micro's up 180% year to date. You know, and then if you went heavy on Tesla, you're down 32% year to date. Good Lord. Crazy. Crazy dynamics. Crazy, I say. Okay, volatility index up about 5.8. That must have been Friday. It usually doesn't update this early. You're at 50% now on GME, 20% on AMC. DJT's at $53. ARM's at $4.80, or up 4.8. You have very little red today. There's like no red today. You do have Google down 2.5% as the GPT event starts in about 37 minutes. So let's see here. What is this? Kevin, pull NVIDIA up weekly chart. NVIDIA weekly, you say, eh? Ooh. Amazon. Apple needs to shut down the store in Maryland to show these idiots reunion. Oh wow, somebody's really really anti Maryland Apple store here. AMC's moving because of Tesla. Sorry, not Tesla, because of GME, right? They move together frequently. I mean, they always used to. Back in 2020, end of 2020, beginning of 2021, they moved together so hard. When one rallied, the other rallied. It was so common. Warren Buffett, 50% less accidents due to Tesla is bad for insurance, but good for people. Yep. Yep. Why would he not invest in Tesla? You know, Warren Buffett really wins by making investments when everybody is in deep despair and companies are basically on the verge of bankruptcy. You have to remember that. You know, he swoops in when there's so much panic. And I don't think you actually have that much panic at Tesla right now. I think if you start running into funding problems, like let's say we get a hot CPI report, and then sales numbers are even worse. Although they are doing that, you know, 0.99 APR special for cars right now at Tesla for I think the end of the month, through the end of the month. It's pretty wild. Make sure to use my referral link if you buy. metkevin.com/Tesla, hashtag partnership, paid partnership. metkevin.com/Tesla, yeah. But anyway, 0.99 on an interest rate for the Model Y. It's a pretty intense teaser there to try to move sales. But yeah, you get a bad CPI report and yields rise and the market falls. I don't know. It's gonna suck. And you know, Buffett would be the kind of person who would come in and buy Tesla at like $50. You know, basically where everybody thinks the company's gonna go bankrupt and there's no bottom and the funding is like nobody's willing to fund it. Tesla's having to raise money by, you know, selling bonds or issuing shares. Elon fails his comp plan and you know, I don't know, the company has to somehow come up with cash to pay him or something instead. These are all really examples that push a company into a corner where Warren Buffett then comes in and says, all right, here's what we're going to do. You're going to put these people on the board. You're going to run the company like this. I'll buy this stake. When I buy this stake, the market will pump because they'll see I bought it. But I want control. I want you to have the board set up this way. I want the company to be run this way, blah, blah, blah. I'm going to trust you guys to run it, but I need you to run it, you know, with this guidance. Though that's when Warren Buffett buys. Warren Buffett doesn't just buy the stock because it went down. He buys often when there's panic. And when he can have some influence over the board. So, yeah. Somebody here says, the fact that the Cyberhammer, $700 on the Tesla website sold out in minutes, only 800 made, is a sign that Tesla is still well-liked. I don't think you can take that as a metric, because I can tell you there are more than 800 Uber Tesla bulls. And they're way more than that. And don't get me wrong, there's so many things I love about Tesla too. I'm not an Uber bull, but they're definitely more than 800. Let's see here. So, okay, let's go back to the charts here. We got 2 minutes to go until the opening. You've got Tesla up 80 bips today. A little bit of a push of a rally into the open here. GME pushing with 50% going into the open. Let's see what we get when it actually opens. 42 bips on the Qs. BTC is sitting at a 62.8. Trade desk here at 70 basis points. We're about 90 seconds away now. You've got Robin the Hood is up 2% after dropping like 6% 2 days in a row. It was a crazy move there by Robinhood to the downside. Once it got rejected dirty. We were watching that in the Stocks and Psych course. I'll show you specifically the line right here. This 1794. You could see when we lost 1794 over here. I can actually take that down to the 5-minute and show you even more. Well, as soon as we lost 1794 right here, as soon as we got rejected here, it was time to get out. That was your screamer to get out. I sent an alert to those in the Stocks and Psychology of Money group. Basically right here at this rejection, like within maybe 5-10 minutes of this rejection, sent that out to everybody in the Stocks and Psych group, and it was straight downhill from there. I mean, after the 1794 reject, you really just melted away for the next couple days here. It was pretty painful, but you are getting a little bit of a recovery now. So keep in mind, we got a code expiring for that one on CPI Day. That's in 2 days. So check it out at meetkevin.com. A lot of people joining. Really, really excited. We've had a lot more volume than previous. Let's listen in here. It kind of goes with market timing. All right. The bell time.
The CBC Real-Time Exchange with the big board. It's the Brazilian-American Chamber of Commerce and at the NASDAQ CRISPR Therapeutics, focused on gene-based medicines.
I like that group very much. I think they do a good job. Just back at Walmart, I go to a lot of Walmarts with my kids. People don't seem to realize
okay, that's so
that
green.
Walmart has become
It is so green right now. It's crazy. Everything's green, green, green. Look at that. You're at 50% on GameStop. Ooh, first red candlestick comes there. You've got Tesla potentially getting rejected at 170. You've got AMD that turns red. First loser.
Lost the lead.
You've got Nvidia that's at 62 basis points. Tesla's really going to push that 170 number here. See if it can break that. If it does, it might be going to 174. GME drops. Down or only up about 45-ish right now. Looking for some movement on Apple. Apple slightly turning red, 172. You've got some movement here on the Qs. The Qs-a-doozles. Qs-a-doos are sitting at about 40 basis points. Then you've got, let's see here. Costco. Wow, it's almost at $800 now. That's crazy. Enphase Green, 1.12. Chipotle up another 43 basis points. You've got AMC turning red candle as well, only up 15 basis points. You've got GameStop really stuck there at 45. It's trying to go back to about 48 right now. AMD still red. Tesla, I don't know if it's going to be able to hold it here at 70 bips. Where are the Qs? Qs right here at about 40 basis points. So let's see how this open goes. Let's listen to Jimbo for a moment.
They provide very cheap goods in
general.
general.
Do they ever? But Temu was a boom for Amazon because if you order something from Temu, it's open about when it will come. But if you order from Amazon, you get the right day.
Qs, by the way, down about 30 at about 38 basis points now, dropping a little bit. BTC still 62.8, so not getting a pump there. You're losing that breakout on Tesla. It's up about 55 basis points.
And it's waste management, the old now WM.
Didn't you have them on last couple weeks?
Yes, but I mean this stuff goes right from your house to landfill.
To the landfill.
And I think we should just send it right to WM, and that will raise their quarter.
Yeah, no, Chinese factories to our landfills. It's an old story.
Well, I just think that this is a bring back, it's kind of a redux.
Yes.
Because I've ordered some stuff from them, and it's rather amazing.
Including
my daughter got $200
a bathing
gift
suit for your wife, which was
just boring. Look at this. There's that rejection on Tesla. Could not break the 170. Will we go for a second attempt on Tesla? We'll see. We're getting red here on ARM. Was up about 5%. Now it's down. It's sitting at about 3%. You've got Vol. Hasn't updated yet. That takes about 15 minutes. Tesla's going to try to go for it again maybe here. AMD keeps going down. Apple's now going down. GME's going down. Affirm's going down. The Qs are going down. Okay, so let's see here. What about, try to understand direction here. You've got, yeah, BTC is also trying to push down a little bit here. You can see that. Then what else? What else? You've got Trade Desk still holding on to a percent here. Yeah, Trade Desk wants to move. Costco just turned red. Salesforce red. Meta is red. Robinhood's keeping up. Microsoft goes red. Enphase stays green. Chipotle is turning red. AMC is still up 17%, holding on there. Oh, Tesla. Look at that. It's trying to push it again. It's really trying to go for that breakout. And ARM's coming back. Yep, ARM's trying to come right back. Where are the Qs? The Q's still bleeding. It's not, I think it's tough to go bullish. I think the day before this, or 2 days before rather, this movement here in CPI, retail sales, and PPI. This is going to be a pretty big catalyst. But looks like we're trying that breakout again there on Tesla. Let's see if it can pull it. Qs continue to fall here. Let's listen in more here.
All year, is it really only about the 6-week period that we're in right now where people really watch the playoffs?
I watched Oklahoma City, Dallas. It was like one of the greatest games ever.
What are you spending the money for? Is it worth it? You're going to start hearing that from those who don't get it.
Oh.
But I think the most interesting component is the possibility that Warner Bros. Discovery, as we discussed last week and reported last week, will compete for the matching rights on the Amazon package as opposed to...
GME just shot up again, now at 54%.
You were here.
I know, I'm just trying.
You were here.
Can I make it a little more exciting than
you're pretending that you hadn't heard that initially. Thank you.
Bingo.
Yeah. Right. As opposed to competing for what has been reported to be NBC's deal to acquire those rights.
Right. Well, I will tell you that the piece last week that said that it's a win-win for Zaslav if you get for Warner if they win.
Yeah, okay. Tesla's got the 1 minute breakout. We'll see if that can hold. But watch that. Let's see if it can. But that 170 line's pretty important for Tesla there. So keep an eye on this one. You've got ARM at 5%. Some enthusiasm coming right back into this market. Going right back up here. Looks like on the Qs. Trying to, at least. First 15 minutes are always so wild. Omen of BTC is still trending down somewhat here. SPY sitting at 21 bips to the upside. 1.5 there on Tesla. And GME 54 getting a little... Oh, it halted. Oh, it halted. Ooh, dirty. Imbalance, baby. Imbalance. Yes. Okay. Yep. Back to the good old days of the halts. So, limit up, limit down pause on GameStop came in at 9:35. So just 5 minutes after. And that's going to be interesting when this reopens, what we end up getting. Okay, so we shall see. Probably 15 minutes or so before that pops back open. Tesla wants to keep going with that rally. It really likes this breakout right here. So sitting at about 171 there on that breakout. And then the Qs at 34. BTC still kind of downish. End phase over here a couple percent. So some optimism going into oh yeah, look at NVIDIA now, push it. Straight up there in the last minute at least. Okay, let's listen in over here. And we'll watch that Tesla breakout too.
The outside capital, and then you basically split revs coming out of this thing once it's up and running. So it's a model that has been potentially being replicated here by Apollo and Intel for this facility in Ireland. Guys, we got one go private this morning of some
it's
size.
A real company.
The Squarespace deal, $6.6 billion equity, $6.9 billion when you throw in debt, $44 a share. Primera, large private equity firm, does a lot of business in Europe as well, around the world. But what is interesting here, a couple of different things. One is when you take a look at Squarespace.
Tesla pump keeps going. It's almost at 2%.
Public almost exactly 3 years ago via a direct listing at 50. So it's getting taken out at 44, which is below the price at which it went public 3 years ago. And it's not alone. Jim, there are a number of companies. Endeavor comes to mind.
Yes.
Maybe some
BTC Omen still trending down, 62.6.
Before saying, we're done. We're done with this.
I totally
done with
agree.
this public thing, and we're going back to private hands.
I mean, Squarespace, look, actually, that revenue, the market capitalization is a little bit up from where it was, but the revenue's been flat for 2 years. Been up since 2020. Now, if you go to the website, which is one of the most poorly designed websites I've seen, given the fact that they help you design your website.
Interesting, yeah.
I think that I looked at them. We went to Wix when Wix. I went to Wix. I'm sorry,
Wix, yeah, Wix. Come on, Kramer. Come on. What are you doing? It's all right. It's okay, Kramer. It's okay.
For very little money, you can get a help for a website. You've got an artist. We use them for our restaurants. We had to give the restaurants up because you can't own a liquor company and a restaurant in this country. But Wix is just a fabulous design company.
And to Jim's point, Squarespace, they say, has been at the forefront of providing services to businesses looking to establish themselves online for the last 2 decades. The company's largest share, Anthony Castellina, its founder and CEO, is going to continue as CEO. He's rolling in most of his equity into the new deal.
But they've done
General
well.
Atlantic was one of the early investors here.
Really? Bill?
Being sold at 6 times sales. So, I mean, you're still talking about
That's
a multiple
very
of
good.
6 years worth of the company's sales. And the final thing I would mention that sort of is notable, but perhaps not nearly as notable as it was a few years back when we sort of first focused on it. Private credit is financing the deal. Don't have the terms, but it's Blackstone, Blue Owl, and Ares that are all stepping up for the financing for Permira that is taking this company private.
Well, they never, the EBITDA has been good, but the net income is
not as good.
Now,
yeah.
David, I think you ought to mention.
What should I mention?
You have to mention the prevalence of private credit as being something where people are wanting to go. Young people, you get out of school, you want to do private credit.
It's the new thing, right?
No, I mean, private credit, I mean, when you get with younger people, what they want to do, no matter what they're doing, they're thinking, except for my kids, they're thinking, which is good because I don't want them to go into this, but private credit.
Private credit.
And so you'll meet people, younger people, and they'll say, what are you up to? I said, private credit. I said, really?
Do they say it like that?
Just sent out an alert for those of you in the Stocks and Psych group. I am making a play for this Friday on some options for this Friday, so stay tuned for that. We've got Nvidia. Nvidia, just look at this. Nvidia just gave up and basically vomited here. Tesla had a nice little breakout here. You got about 2%. You got $2 on this. Usually you end up going to 174, but you've got that bad omen on BTC, and I don't like the bad omens. So that downtrend on BTC since the open right here we've gone from about 62.8. We're down about $200 here on the omen for BTC, so we'll keep an eye on that. You've got, that makes it tough for me to really bet on a call here for Tesla when I got a bad omen on BTC, and I've got the Qs falling. We'll see again. The first 15 minutes of trade are always very volatile. Well, we're coming up on the end of the first 15 minutes of trade here. So looks like we're now going to be moving in the downward direction here. On Supermicro, just broke 792. This is a day trade line. It doesn't look like there was a lot of respect for this line at all. You did get a candle wick down to it, but it didn't really, I can't really say that reiterates or does anything in that line. So you've got Intel up 2.5 now after that Ireland talk. Tesla wants to keep going. Again, usually when you break this line, you're at 174. Not always, but it's just going to depend on the overall direction, I think, of the market as well. Q's trying to come back right here. BTCs also trying to find a little bit of a floor there. How's our, let's see, Meta's down 2%. Wow, Shopify's down 65. You've got Enphase up 2, Microsoft 45, SBUX 23. What do we got here? Yeah, 24 basis points to the downside. PayPal's up a little bit, and QCOM's actually up 74. Nice. Okay, all right. So GME's still halted. Tesla's still going. Tesla's gonna pick up for GME right here, and we'll see what happens. With a bad omen on BTC, personally, I'm probably going to look at, depending on how the market goes, but you go 174 here, and then you go short. That's something to watch. I have no shorts on Tesla right now, but that'll be interesting. So ARM wanting to roll over, AMD rolling over. It's interesting how many of these are rolling over. And see, that's what makes me not very happy about wanting bullish positions right now, because the first 15 minutes you really went from like yeah things are okay to things are not okay. So the chip sector's rolling over, SMCI, Nvidia, BTC again down $200 there in the since the trading day. The Qs are falling. Affirm is literally giving up its 5% here on a gain. So I mean, I don't know, but it just feels like the direction based on the first 15 minutes of trade, which it could always change, It feels like the direction based on the first 15 minutes of trade here is down, not up, which if something rallies like Tesla, the next resistance line is going to be pretty well in play. Just be careful. Sometimes you end up breaking 174, you go right to 175. So, you know, this is where the paper handlers will get removed. If you go short here and it runs up to here, this is where the paper handlers will go, and then you might get your rejection. So we'll see. Almost at 3% now on Tesla. So very, very, very common movement between these three lines. Okay, Nvidia keeps going. Supermicro keeps going. GME is still halted. What a surprise. Qs keep going down, folks. You're about to turn negative on the Qs. This is crazy. You were up like 40 basis points there for a moment, and the bad omen of the BT sizzle strikes again with the Qs about to go negative. You're at 3 basis points up now. Etsy's still up about 80. Apple's holding on. As I say that, I get a big red candle there on Apple. Here we go. About to go negadoozle. Nope, not yet. I'm ready to push the button. I'm ready to push it. SQQs are going positive. I don't know how they're both positive. Only one can be positive. There you go. Looked like you probably had some weird candle there for a moment. But yeah, SQQ is down as much as 1% at the open, which makes sense. It's a 3x leveraged inverse on the Qs. So we'll see. Looks like Tesla's having a little bit of a breather as Nvidia is trying to recover a little. Supermicro don't give a crap. It's going down 4% today. ARM's back to 4%. So, all right, these are going to be what I'm watching. Let's see what we have over here and if there's any news that's been coming out over the past few minutes.
True opposition that would have resulted in Chevron coming back to the table, but it doesn't appear that effort has really happened. Elliott would have been the most likely, given they know Hess really well, having undertaken a proxy fight there many, many years ago, and they didn't. And a number of other shareholders I was hearing about and talking to decided not to.
Did you look at the Wall Street Journal editorial about the FTC throwing Scott Sheffield under the bus?
I didn't see it, no.
It's really brutal about the FTC. Scott Sheffield's probably the dean of the oil group. He was the CEO
of Pioneer.
Very widely respected man. And that's where they said they have letters showing that he tried to fix price. And the people I deal with say, well, he was in communication with everybody at all times. But the journal said, this is just a classic overreach, the FTC, just throwing him on the bus. It seems like Exxon was not necessarily standing up for Mr. Sheffield.
They just wanted to get their deal done.
They want the deal done.
Yeah.
Oh, GME's back, and it's at 69%. Holy crapolas! This one keeps a-going. It can't stop. You can't stop the 72% on the GME. Holy smoke-a-dokas. Oh, it's at 81%. Holy crap, it keeps going. This is crazy. Then you've got Tesla topping out a little bit. And, yep, you're now at 81% on the GM Dizzles. 81%. You got a little red candle coming in here. I don't know how long that's going to last at all, but we'll see. Holy smokes, that was a crazy movement. Absolutely insane movement there on GME. So keep an eye on this. This will go. This is going wild. It's a stock gone wild. Supermicro's at 3%. Nvidia's trying to come back at 80 bips. The Qs are at 6 basis points. Dragging along the bottom. Didn't see a red yet, though. And you're right back to halted on GME. Oh my gosh. What's going to happen next? Next halt's going to go crazy. Yeah, this is pretty remarkable. Okay. So then you've got... Okay, Tesla continues. 2.9 right now. And you've got ARM trying to recover as well. I don't know. Which way do we go? Ooh, BTC rising again. That's a good sign. So watch that. Okay, so GME's halted again, which is a little boring. I'd like to kind of keep watching this. There we go. Come on. Tesla's gonna, it's almost there. It's almost at the 174. Here we go. So that's pretty remarkable. It's following the TA perfectly so far. So is it gonna break through the 174, or is it going to get rejected at 174? That is what I'm watching. Yeah, we shall see. There it is. Almost there. 174. There it is. There it is. Looks like it's trying to push it. Oh. This is entertaining. Come on. Oh. That's the place to enter. Let's see if it ends up pushing. Is it going to push up to 175? We shall see. Next minute. Watch, it's going to go green here. Go to 175. No. Can't hold it. Can't hold it. You can't keep it up. The pressure's too high. It's too much shorting pressure. It's just getting shorted. The line. The line. Here come the shorts. Where are the shorts? Not a GME. Right there. Alright, we'll see. Alright, what else is going on? Let's see. Okay. Flickers of meme stock mania. Yeah. Yeah. We shall. I really want to see GME unlock again. There's like probably no selling pressure at all. That's kind of hilarious. So, yeah, sitting on that line now on the 174. Here we go. NVIDIA's recovering. Nice recovery on NVIDIA. Recovery on Supermicro. And ARM still sitting at about 4%. It was up about 5 at a high. Qs are up again a little bit. You're about 11 basis points there on the Qs. And, yeah, you're having trouble there on Tesla's 174 line. Look at that. So the unaveraged candlesticks. Come on, man. You can do it. Vol's obviously up today. That's not a surprise. There it goes. And waiting on this GME one to keep moving here. 81% right now. It doesn't actually seem like you really have... like, how do you potentially have sellers? I mean, I guess you do. You have sellers at 32, sellers at 33, but these are not a lot of shares. These are tiny, tiny little share baskets. So you really need some more sellers to come in, and you just don't have that right now. Look at this. Just can't keep it up, Tess. Come on. All right. Now, still waiting for that halt to open up on GME. Second one now. So the first halt was, when did we get our last halt here? First halt was maybe, what, 5 minutes ago or so? So it looks like you had maybe about a 12-minute hold. Let me see here. Halts. Halt data. So, okay, so you had a pause at 35, pause at 42, pause at 49. So it's giving it like 5. Oh, there it is. 90% now. Oh, it's about to be at 100%. Holy smokes. I think it got halted again. It's just going to keep halting up and up and up. I can't tell. It's not moving right now. I don't see that it says halt again. Yep, there it is. Halt again. Holy crap. Oh my lord. Oh, hey, Tesla's going to 175. 175.60 is what you got to watch for now. 175.60. Broke right through that. And Qs are up again as well. BTC gave us about $100 back here. But doesn't seem like Yeah, even AI is trying to push back a little bit. Wild day. And yeah, 175.60 is the Tesla line to watch. Incredible. Incredible! This is pretty entertaining. I really want to see this GME movement here, as well as watching this on Tesla here. And we got to get to the course member live stream soon. If you're not a member of the course member live streams yet, make sure you join, especially the Stocks the Site group. You get all my buy sell alerts for trade ideas. No guarantees. Obviously, the goal is to do as well as possible, and it's, knock on wood, it's been going really, really well so far. So hopefully it does continue to do so. And really excited about it. And so are a lot of folks who are getting into trading or learning about trading. The goal is to help bring you up from beginner level to where you can stand and trade. The Tesla move here, clearly getting rejected there at that 175.08, a little earlier than I thought you would have gotten rejected on the 175.60, but it is so far playing out where if you break through here, you get kind of this is where people will paper hand their shorts. So now I'm watching GME. Yeah, GME is just going nuts. You've got, I mean, last up, you're up about 90% here. We're waiting now for the next. It looks like usually about every 5 minutes it unlocks. 5 to 7 minutes it unlocks. So we should be about 2 minutes from the next unlock. 2 minutes. 2 minutes to go. Apple's up nicely at about 1.2% right now. Qs are really struggling today. You're only at about 5-6 basis points. Qs really getting whacked. This is surprising that on a day that you have euphoria in certain parts of the market. SoftBank talking about getting into AI chips. A little surprising that you have some of these moves down on Meta and Facebook, because you'd really expect to see some additional movement. It might be Google as well, possibly because you've got that GPT announcement, whatever it might hold for us, coming out soon. Tesla, yeah, Tesla's, as usual, can't really hold on to that 175. Now, will it bounce on 174, or do you break through? We shall see. Okay, so yeah, what's really interesting is this is such a low volume stock that the thing about GME is it's almost kind of like, how do you get in? And I think that's probably what's happening right now. Is there a lot, every time this basically unlocks, you have this enthusiasm over, okay, how do you get in? Like, people will pay any price for it. And we know that, oh, yeah. I just saw some data change there. But another one that's moving, by the way, is costs. This was another one that moved back in the meme days. Suspended. What have we done this morning? Let's go to the hour chart here. Yeah, you were trading about $3. Yeah, you're up substantially on costs. 60% over here. What about, is BlackBerry moving on this? BlackBerry, yeah, 11%. What about like Bed Bath & Beyond went bankrupt, but yeah, no, they're delisted. Wow. Okay. Yeah. Tesla's struggling over here. Come on, GME, where are you? Should be unlocked now. We're at 5 minutes and about 10 seconds. Now we're at 5 minutes. Oh, there it is, and it's unlocked again. Look at that, on time, 5-minute lock. Holy crap, it's up 109% now, and it just it's not halted yet. Not halted yet. Holy smokes, this is not a drill. 110%, and this is just going to end up getting halted again. Holy smokes. Oh my goodness. Halted again. Wow. Wow, wow, wow. That was perfect at about 5 minutes there. So that was a 0954 to an unlock 5 minutes later. And literally, we only stayed unlocked for 9 plus 17. We only stayed unlocked for 26 seconds. So you had 26 seconds to have your order fill. Otherwise, GG's. That's insane. That's insane. Tesla back at 175. Look at that. Knocking on the 175 door again. Cost still suspended. Nvidia's trying to go up again here. Qs are up at 17 basis points. The BTC omen has gone away. It's starting to go a little positive again here on BT Sizzle. 17, 16 basis points here. This is crazy. These halts. You know, it's... I know there are a lot of people who are, like, anxious to get in. And that's what this is. It's like a euphoria of trying to get in. And so there's some remarkable price action over here. Which is wild. Absolutely wild. So, you know, I suppose the next level theoretically here should be 43. I don't think you have anybody selling this, though. That's the question. Like, who's going to sit here and sell it? Down Detector is reporting that E-Trade is down. Let's see here. Let's see here. What about... Yeah, no, it keep getting these pauses here. AMC, DJT. DJT is trending as well. BYD is trending a little bit. But let's look at DJT. DJT, yeah, DJT is moving up about 9% as well. Good meme rally here. You've got Tesla. Oh, look at that. It went to 175.40. Got even closer to that line. 175.60 is generally what I watch on this one. But, I mean, this isn't where the show is. The show is right here. This is where the entertainment is. These are, mind you, the non-averaged candles on GME. This is crazy. You just do not have the selling liquidity to satiate demand for this puppy. Which is interesting because even if you're up and you wanted to sell, you know, you have to be so quick with just the halts. You got, 26 seconds between the last one. So the next unlock should be in about a minute and a half. We're looking for an unlock at, I'll give you the exact time, 7:05 and about 10 seconds after. So you can see my clock right here, 7:04 even. Waiting to see what happens here. And that rejection continues there on Tesla. All right, so... Now, orders don't get canceled with a halt. They just can't be filled. So they're just there. Like, you can still, people can still put limits in and stuff. And the idea is to fill up the order book, right? They're trying to get more sellers. You need sellers. That's called liquidity. So you need people to come in and say that they're willing to sell the shares. And usually halts give you some time on that. Okay, cost just got paused again. Okay, we're close. Here we go. We should be in about 10 seconds here. 10 seconds to a release. Let's see if this goes up to... Come on. Let's go to 43, baby. And it should unlock right about now. No. Oh, yep, it unlocked on time. On time, it's at 37.6, 117% right now. Oh, it's going down. We got a red candlestick coming in. Oh, it just got limited on the downside. Oh, here come the sellers. Oh, no, it just got halted on the downside. No way. What a flip. Holy smokas. Somebody just said they got filled. Hopefully you got filled on the out if that is the red candlestick that it's about to hit. Because see, now, here's the scary thing. Watch what happens now if people start putting in the sell orders. Holy smokes, this ain't no jokes. Okay, hold on. Let's see what the time is now. This is crazy. We gotta. You've got. Hold on a second here. I want to see what the timestamp was on that. Timestamp still isn't out, but we were up. We were up even less time than we were up previously. Last time we were up 26 seconds before the hole, and now we're sitting at. Boy, that was even less. I'm gonna guess that was maybe 20 seconds. Maybe. That was really, really, really quick. So we'll see what happens here. Let's see. Okay. Okay. Come on. Where's my timer? There it is. Okay, so it was up 24 seconds. 24 seconds. Holy smokes. 24 seconds. That's all you got. So the last time it was 26 seconds. Now you got 24 seconds. So let's write these down, okay? Let's put a little thing. Put a little thingadoozle up. So if I write this down, you're open for we can do this here. We were open for 5 minutes and 46 seconds. Then you halted. Then you were open for, after 5 minutes, you would have been open for about 2 minutes. Oh, let's see here. 46, 14, 38, 1 minute, 38 seconds. Okay. That was the time thereafter. Then after that, you were open for 47, 36, plus 20 is 56, 156. Then you were open for 156. Let me make sure I have my math right quickly on the first one. So, or sorry, on the second one. Because that was, yeah, no, that's right. So 5 minutes, 46 seconds, 1 minute, 38 seconds, 1 minute, 56 seconds. Then you were open for 5 minutes thereafter. Then you were open for 23 seconds. Then you were open for 26 seconds. Then you were open for 24 seconds. Okay, so you can see how hard it is to actually get a trade done here on GameStop right now. This is crazy. So I'm gonna put those numbers on eHack. Let me see here. GameStop times between halts today. This is hilarious. Okay, so slap that all over here, and then we can kind of track it together. This would be entertaining. Okay, so the next hit should be at, last trading halt was 10:05:33. So, okay, here we go. So it's coming up. All right, so the next one should be in about 1 minute. About 1 minute for the next one. Tesla, yeah, not a surprise. It continues its rejection at 175, but that's not where the entertainment is today. DJT, red candles after that as well. BlackBerry, red candles. Google, red candles. Nvidia's back, kind of holding up a little bit. So the Qs, yeah, the Qs are back up a little bit. Oh, Bitcoin's rallying a bit too. So some optimism in the market today. The bad omen of BTC is somewhat gone. I always like to see BTC as a leading indicator. BTC did move down today by about $200, and it did end up coming back here. Okay, all right, folks, where are we gonna go? This is it. Are you ready for this? We got about 25 seconds to go. In those 25 seconds, remember, you can get all my buy-sell alerts if you're part of the Stocks and Psychology of Money group. Crazy timing, but we've got the next coupon expiring this Wednesday on CPI Day. It's CPI Day and Retail Sales Day, which is crazy. Okay, 6 seconds. Okay, here we go. 3, 2, 1, and oh, they're keeping it locked. They missed the 5 minutes. Oh, no, there it is. Oh, 87%. That's another red candle down. Oh, no, it's coming. Well, ooh, I don't know. Where's it going? It's at 83, 85, 84, 82, 81, 83. Trending down, trending down. 79, I just saw a 70. Am I going to get a 75 here? I see a 78, 77. Do I see a 75 yet? We're going to 75. It looks like 75% up. We're at 76, and we're halted again. No, we're not. No, 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 no. It's still going. That was just an odd little pause there. Okay. All right. Oh, back up. Look at that bounce. Holy smokes. We got a fib bounce at 30.57. Actually, the exact bounce there was 30.91. 30.91, and you got a bounce, which is basically, look at it play the fibs right here. It's playing the fibs. This is the Fibonacci retracement from its top to its more recent bottom. Actually, I don't think it is from its top because this is way too tight for it to be from its top. So it must have been a near-term top that I used. Let me see what I have really quickly. I'm just going to zoom out for a moment. This is the longest time. You're getting a more balanced market. This is the longest time that it's actually been up. There we go. So these fibs are traced. Oh, let's clean this up a little bit here. So the fibs right here, you're at 79%, by the way. These fibs are traced from the high of November of 21. So I took basically the top of the entire market rather than that short squeeze top. So I have the top of the entire market, November of 21. That's what I went with to draw these fibs. I got a 36.94 line, and I've got a 30.67 line right here. We're at about 74% right now to the upside. Still getting whacked a little bit. I got red now on Tesla. Tesla looks like it wants to, again, reject off that 175. We've been talking about this all morning. We've been talking about this leading up on the breakout from 170. We've been talking about exactly the two places to be getting rejected. So far, it's playing out exactly. GameStop halted again. That's the longest time it's been open there, and that I've seen in about the last 5 halts here. So I think you got a solid 2 minutes of trade in there. You might have even gotten close to no. That was probably about 2.5 minutes of trade. We'll find out exactly what that was. But you are starting to get those red candles there. But anyway, if you want, when I send my signals on these, you get my signals on these through alerts and notifications. Make sure you're part of the Stocks and Psych group, meetkevin.com. Email us if you have questions. You can bundle up at staff@meetkevin.com if you have questions for bundling. But anyway, it looks like our next halt here is going to be DJT moved back up again a little bit. Google's still down. GPT event is what some folks are going to be paying attention to now. Although I think it's tough to pay attention to the GPT event when you've got so much enthusiasm around GME. So looking for GPT news. I don't actually particularly see anything just yet. No, all right, so we're going to watch this. Let's see what the halt time frame was this time. Okay, yeah, we were open for 2 minutes and 13 seconds. 2 minutes, 13 seconds. Next open, halted, I'm going to write this down. Let's see here. Okay, come on. Halted at 10:12:46. So the next open is going to be, I'll change that to Pacific time. There we go. Next open is going to be 17:46. 17 minutes after the hour, 46 seconds after. That's when it should open again. So let's see here. Okay, this is Google. Got NVIDIA. NVIDIA's still trying to climb, honestly. And look at cost. Oh, that was short-lived momentum on cost. It was up as much as 60%. Got suspended, and now it's up about 37. So a little bit of a softening here. Ooh, Tesla sitting right at that 174 line. Oh dear. Look at that, right between the fibs. Let's go to the unaveraged candlestick. You could really see that gap down on open here. You're waiting for a more balanced order book. The balanced order book is the game changer here. And so where does this balance out today? Again, up 71% right now, waiting for the next unlock. Next unlock is in less than 2 minutes. Somebody's now reporting that E-Trade is back up. Oh, OpenAI is 10 a.m. PST. Oh, my bad. Oh, okay. I thought it was 7. My bad. Thank you for that. That explains that. Somebody here says they swung trade Tesla. Good for you. Good. I hope you were able to play those calls, and I hope you got out at those lines then, because as you can see, it's certainly bleeding out somewhat on schedule there. So now you've got 1 minute to go. Yeah, those are the kind of lines that I like to trade. I really like to trade the lines. Sometimes I'll hedge trade, but I do really prefer trading the lines. I get burned a lot less when I follow the lines, and but I am playing hedge trades as well going into CPI. So, but that's okay because I'd rather be hedged to the downside. So I've got some exposure there to the upside as well. So 26 basis points there on the Qs. Tesla can't keep it up. All right, here we go. We're within 30 seconds now of GME coming back. All right, this should be at 46. 46 after, so we got about 30 seconds. 30 seconds to go. And we'll go ahead and see, are we going to get more pressure on that order book to the sell side? About 15 seconds to go. Let's get some music. Here we go. Okay. Looking for 46. 46. 3, 2, 1, and there it is. 69. I'm at 69. That's slightly down. It's balanced though. 61. Oh, here we go. Sorry, 71. 76. That's a candle up. 75. Are we getting balance on this fib? Are we gonna hold this fib? 74. And I got 75 again. That's up. 74, 70. Oh, down to 69. I just saw a 69 there. Can I get a 65? Not that we want it, but are we going to get a 65 or a 75 first? That's the big question now. You going to get 65 or 75 first? And bobbing around 70 right now. 69, 69, 70, 71, 73. Come on, bullish is 75. Bullish shows us 70, 75. 72, 72, 71, 72, 73, 74. Oh, it's so close to 75. Almost. Nope. 73. It's crazy. Tesla's still bleeding. If he pulled off that the line trade there. Oh, 77 there on GME. Let's go. Bounce on the fib. That's a really good sign. That's bullish. That's bullish on the GMEs. Good bounce there at 75%. Solid establishment of that fib line. That's a great sign. People are really gonna want to find out like where is it gonna balance out, and seeing a balance there at 75% up is a good sign. So now you're slowly getting this move up here. 82 now, 83 almost. Nope, back to 81. But again, watch this bounce right here. Big important point right there. Tesla. Again, the trade plays out as expected. Qs trading mostly sideways. Nvidia's almost green again. That's remarkable. Yeah, there's your look at it. I mean, it's like a perfect fib trade, honestly. It's kind of remarkable. I mean, you wicked over it, but you got basically perfect bounces there at both the reject Did we get halted again? Yep, we're back to halted. So you can see the stock is starting to trade a little bit longer. It looks like you're also getting halts now on Rent the Runway. Rent the Runway. Oh, yeah. Look at that. You opened up today. Let's see here. Oh, yeah. Okay. Yesterday, you closed at 1775. You ran all the way up to about 2339. And now you're getting this rotation down again on Rent the Runway. Tesla sideways. Let's see here. Volatility is only up 6%. I'm surprised. But then again, the indices aren't really moving that much. And really, I would expect that you would get some kind of bleed on the indices going into PPI tomorrow. So tomorrow at 5:30 a.m., I'll be covering PPI Live. I encourage you to be there. So PPI Live will be tomorrow at 5:30 a.m. Then on Wednesday, we'll be covering retail sales and CPI Live. Now, that's a big deal. You want to make sure you subscribe, hit the bell, so you're live for CPI and retail sales. Those are going to make or break the market this week, either reiterating that we don't need any more hikes, or if we need cuts, or if we do need hikes. This week is the week we find that out. So buckle up. This is going to be, are we getting a continuation of Q1 inflation, or are we going to go to to the positive side? We shall see. Okay, let's look at the halt calendar again. So this time we ran for, okay, let's go with 2006. So we were open for 14:22. That puts me at 18:20. 2 minutes and 22 seconds. So we're expanding how long we're open, which was falling there for a period of time. And so your next open now is going to be at 7:25 and 6 seconds after. Yeah. So these halts, important to remember why the halts exist. It's when there's an imbalance. It's called the lulled, or limit up, limit down. And basically there are these bands that are drawn around every stock price. Think about it like a rubber band. And it says the stock can go up or down within that rubber band. And if it exceeds that rubber band without additional liquidity coming in, there'll be usually a 5-minute trading halt. And the reason, it could be various different levels, but the reason they usually do these 5-minute halts is to try to let more buyers and sellers come into the market so you can have balance. Like, what's not sustainable is if, everyone and their mom wants to buy the shares and there's no seller. Then what happens is the price just skyrockets, frankly, without a balanced market. That's an imbalanced market. And, that creates a potential for manipulation. So the idea is, well, if you give people a 5-minute break, while it does kill momentum to either direction, it lets more of the other side come in so you can actually have balanced price discovery. Obviously, if you're bullish, you don't want halts, because if you're bullish and you already have your shares, you want people to kind of keep hitting that limit up, and you want that limit up to keep going and going and going. But that's not a balanced market. That's the example, or that's the definition of basically a highly imbalanced market. And so it leads to wild price fluctuations. And as we saw during the original GME days, those wild price fluctuations can potentially take down brokerages in the financial system. Pretty wild. The buyers are buying from sellers, but the problem is you're buying out the order book, right? So let me give you an example. Let's say you have 1 million shares wanting to be bought at $32. And there's one guy that's like, I'll sell 100 shares at $36. Well, what'll happen is you'll gap up to $36 on 100 shares of selling volume and 100 shares of transactions, so you don't get filled. So, 999,000 shares didn't get filled. But now the pricing is being set on the movement of just 100 shares, which is kind of ludicrous. So that's why there are these pauses. Oh, look, we're unpaused. Yep, right on schedule. Right on schedule. 6 seconds after the 25 minute. We're at 86% right here. And 37%. Yeah, I know people say, oh, it's manipulation to either side or whatever. The rules of the game have always been clear. If you hit lulled, the limit up, limit down, you get halted. Like the rules are pretty straightforward. But look at that. It's obviously not hurting GME here. You're getting a nice move here. And you're up at 88% right here. Up at 87 now, 86. You know, riding that 30 line, I think that might be where you end up settling out today, huh? 30.57 is the number to target. And you're at 88%, 89%. It looks, see, this feels pretty balanced right now. You're not getting that sort of extreme movement, and that might prevent this from getting halted again. 90% now, 89%, 91. Qs are up 30 basis points, so a nice little move up there on the Qs. Tesla, ooh, look at that. Tesla plays 174 again. And dancing on the 174. Very important line for Tesla. You've got GME getting a red candle again. 86 here. And 87, 86. Relatively balanced. No. Usually when you trade in balance, you don't get a halt. Now you're starting to get a thicker red candle here. 83%. Let's see if we're going to go right back to that line. Looks like we're going right back to that 30-40 line. Yeah, couple red candles here in a row now. Still positive vibes coming out of BTC. You're actually up now $200 on the day. You were down $200 on the day when we started and the bell opened. Oh, it's definitely time for some more coffee. But anyway, 82% here. Look at that bounce again. Holding this 30-40 line, or what do we have? Is it 30-40 or 30-57? It's 30-57. Holding that 30-57 line, very important. Seems to be holding so right now. DJT's up about 10%. Rent the Runway up 8.7. Costs. This is a red flag right here. Costs basically straight down. It was up like 60-70% there for a moment. Straight down. So you had the momentum bleed on costs. Momentum bleed on BlackBerry. DJT keeps going. Look at that bleed on Rent the Runway. Holy smokes, that sucker's probably halted right now. And, ooh, Tesla's trying to break up again. All right, here it is. Let's go to the non-average here. Yep, look how stable that is. Stable at about 88%. Very nice. Very nice moves there. Let's go to Robin the Hood. Wow, yep, Robin the Hood on the meme euphoria up 8%. Not a surprise. The earnings were actually pretty good. There was some fear over crypto there for a moment. But, yeah, not a surprise that on a day like today where GameStop's up 88%, you've got a big movement there from Robin Hood. You said I could take down brokers and financial institutions. Isn't it their fault for shorting? Well, that implies broker-dealers are shorting. No. Broker-dealers have requirements set up by the Depository Trust Corp. And so the rules of the game are very formulaic. Other people shorting could be contributing to the failure of other companies. Yeah. Like, I don't think Robinhood's in there shorting. They were sort of just a victim of the rules that are not set by Robinhood. You know, if you get kicked out of the DTCC, you're done. You're bankrupt. And so the rules are very clear in terms of how much you have to allocate based on volatility. And the halts are very clearly established. That's not to say that there aren't institutions that exist that shorted the crap out of GameStop the last time around. There definitely are. I was just saying you have to like point the gun at the right villain, right? Like just because you see Weevil show halt, it's kind of like shooting the messenger, you know. So anyway, yeah, it's still at 90% here. And 35% there on NVIDIA. Or sorry, 35 basis points on NVIDIA to the downside. It looks like, ooh, Rent the Runway's coming back. Look at that bounce on Rent. It's another momentum mover today. Short interest today on GME, it started at only about 25%. So really, it doesn't seem like you have a substantial short squeeze today. It feels a lot more like what you have is just a lack of volume. And so the lack of trading volume, which would include selling volume, has really set up this this incredible rally here. So yeah, exactly. I think it was 5 Sigma event, Mike and Ike, but yes, there was that. I mean, you might be right, but for some reason I remember it being a 5 Sigma event, basically five standard deviations, right? So yeah, that's really interesting. Oh, that's just fascinating. So look at this. I mean, if you have not drawn these fibs yet, I just like, well, no, of course, Daniel, there's a lot of volume today, 45 million shares. I'm saying leading into today, the volume has actually been relatively low. If you look, you know, as opposed to, with the exception of like the last 4 trading days, the volume's been like 1.5 to 4 million shares. And so that low volume with sudden buy pressure can really pump up a stock. You start the momentum. So you go from $9 to $17 or whatever, and then it, you know, all it takes is another meme catalyst to really move. So it's really kind of incredible, actually. It does look like you got a red candle there on Tesla. 174 place, that's a tough place for it to really keep it up. NVIDIA moving down now again a little bit. Costs as well. Apple still holding on. GME still holding on. You've really stabilized here with the exception of the Qs rotating down now. And you got that bad omen coming back on BTC. Really, really, really interesting. So let's see. Somebody here shouting out this letter. Let's see what they say. Okie dokie 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 dokie. Let's see here. So let's see here. Short sellers have lost $1 billion in the first hour of trading. Yep. 25-ish%, I think was what the short was. So, but anyway. So, only up 19% basis points now on the Qs. Tesla holding on. The market is really stabilizing here. I've been watching also the call options on GME. They've gone from about, $30 calls have gone from about $3. They went all the way up to like $11. Now they're at $8. And so I've been watching those on my phone here as I just kind of keep the option pricing up just to see how the volatility is moving. Volatility chilling out a little bit here. And the market really seems like it's just relaxing. Tesla's relaxing over at 174. GME is relaxing around 31, 32. NVIDIA's chilling out 0.5%. DJT 8. Robinhood 8. Google's been down 2% all morning. So you're really finding your footing here in the market, it seems. 63K is also good on BTC. If you haven't been watching BTC, this is something else we've been talking about in the Stocks and Psych group where we send those trade alerts. Make sure you're part of those. Just go to meetkevin.com to sign up. You pay once, you get lifetime access forever. But something you'll notice over here on BTC is the 61.7 line. Very, very crucial. Very crucial line that we'll pay attention to. So, yeah, there we go. GME. If it breaks, it's going to get halted to the downside. If it halts 30.50 or breaks 30.57, you get a solid candlestick under 30.57, you'll get halted to the downside again. I don't know that you will. It seems like it's been pretty stable, but that's certainly what I'd be watching right here is a position on GME. I wonder, volatility is so high. I think both puts and calls are pretty high. Yeah, both puts and calls are basically priced the same. Almost the same. Quite remarkable. And there's also not that much open interest on the puts. mostly because I think most of what's happening right now is people are just buying calls. And very, very dangerous to... Oh, yeah. Just the difference in volume here is just absolutely insane. But big candle forming there, but you're still staying above that 30.57. If you settle out, volatility will stabilize. And if volatility stabilizes, these option contracts will actually lose volume or value just because of a decline in volatility. We're now perfectly bouncing on my line. Let's see if you could get a nice pick back up over here. Come on. This is the non-averaged candlestick, mind you. Come on. Come on. Nope. It's gonna keep sitting there, huh? So, oh, there it goes. Comes popping back up a little bit. So you only wick down to that level. Again, reiterating that fib retracement line. Very, very good. Tesla, again, reiterating that it cannot hold on to 174. All right, so with that said, I think I've done my part. Now it's time to jump on over to the course member live stream. If you're not part of the course member live stream yet, make sure you join. Go to meetkevin.com. Next expiring coupon code is CPI Day. CPI and PPI will be covering it live. I'll be setting all my trade alerts in the Stocks Insight group. You get lifetime access to those and to the course member live streams. So we'll see you over there. Let's go ahead and push L button.
Just close the fucking door. Close the door.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. No. All right. Let's see if the market can hold up or not. Testing my line again, folks. We'll see you in the next one. All right. Goodbye, folks.